a wondrous star. It's like the mirror of my mind. Well, hello. I'm going to answer a very simple question. How many markets should you trade? And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the vocal talent that is the Scruffy Trader. And I say vocal talent very loosely. I just like to sing song. And why? Why not? I can do what I like when I like. And I love my life. And why is that? Well, that's because I've worked for myself for over 20 years. And I've traded for 15 plus of those. Yes, when I started, trading was a lot different than it is today. But I've learned a lot through the years. And part of that journey was sort of journaling, etc. You'll see me do a lot about spreadsheets and journaling because I genuinely live on one as being a business owner. And videoing my trades was part of that journal, which has now become this channel. And now it's grown a little bit and you become a little bit of a just loose public figure. I get asked lots of questions. So I thought I'd answer one in this coffee time with Scruff. Because on a Saturday afternoon, I like to grab my coffee, kind of reflect on the week, update my journals, that sort of thing. And try and catch up with emails that I've missed during the week. And what I've had on a number of requests over the last couple of weeks is, how many markets should you trade? And it's quite a difficult question to answer because there's no right or wrong answer to it. It's really personality specific. If you're a swing trader and you're looking at the market for maybe it's an hour on a night time and it's on a daily chart or a 4-hour chart, you know, a long time frame, looking at multiple markets is quite easy, you know, and you can have a set criteria. For argument's sake, you like the golden cross strategy, and that's a 50 moving average crossing a 200 moving average, and then the death cross is when it comes back the other way. Okay, very simple system, but it takes a long time to play out. So, well, it takes a long time if you do it properly because it's based on a daily candlestick, you know. So if you're looking at the daily, you can flick through all 28 to see if the 50 is getting close to the 200. And if it is, you can make a note of it, and it takes seconds to do it. So there's very little sort of analysis to be done with that. And you can put that into sort of the S&P 500, the other indices, that sort of thing, and commodities, gold, that sort of thing. So my answer is, if you're a swing trader and that's all you do, you can look at loads of different markets. Doesn't really matter, you know, because the trick with swing trading is have one system. I mean, I personally use a system that I call the river, and I've used it for a long time, and it pays dividends. Is it 100% hit rate? Of course it's not. Is it better than 50%? Most definitely, you know, but ultimately, does it make me money? Well, it pays for my car every 2 years, and it gets me a nice holiday, you know. And you see, if you go through the videos, you'll see last Christmas, bought Winky a Jaguar with it. So I know it works, so I'm quite happy with that. But then I'm also a day trader. Now, when I'm day trading, I thin it right down. I only really look at a handful of markets for day trading, and they are the markets that move, you know, fast moving markets. So I look at cable, I look at pound JPY, the DAX, the FTSE, oil occasionally, but that's about it. That's about as much as I trade during the day. And if I boiled it right back, I'd probably only ever trade 3 markets, and it would be cable, the DAX, and the FTSE. If I had a gun to my head and I was told I had to calm it down, and then if I was told I had to calm it down further, I would look at the DAX as a single indices and cable, or pound USD, as my preferred currency pair. And why? Because I know them. I've looked at them every day for years. I can see movements within them, but also I know I can get my target out of them, which is 10, 20 pips at a trade. Now, when I'm day trading, that's all I'm looking for. You know, anything more than that is brilliant. But if I can get a trade that can go 10 pips and it can maybe run to 20, I think that's good for a day trade. And why? Because the ATR tells me. Now I'm going to flick on the ATR and show something with that actually. Got a question, or a comment rather. I'm going to go more into this week and showing you how an ATR works. And it was the New Zealand Euro. And Joshua, salute to you, my friend. He didn't understand where the cryptos, that's not right. Want this one? How it was so low. Well, with an ATR, and this is how you can pick your trades out, guys. If you're swing trading, ATR doesn't come into it. You're just looking for a movement over how many days, weeks, months. You get out of it what you can. When you're day trading, you need to get in and you need to get out. And if you've got a very small ATR, it's not going to happen. Why? Because the market's too slow. It doesn't move quick enough. Now on this platform, it shows some of the pairs backwards, and it's to do with cost. So I'll quickly show you this. So the one queried originally was this one. So if I pull the ATR rather, average true range on Euro New Zealand, it's currently 115. Okay, and if we pull up how much these things cost to trade, you need about £835 to open it up. However, if you go further down the list, there is New Zealand Euro, where it is round the opposite way. And I really don't know how this works, but it's quite cheap to trade, $299 for the same pound. But the ATR on it is currently about 41. So it's essentially the same pair, but in 2 different formats. It's like a mirror of each other. And sometimes when I'm talking, I'll be looking at the cheaper version to get in. Why? Because it's a swing trade for me. It's not something I day trade. So I just look at the cheapest version. So I hope that answers your question, but I will go into that further on. But why I've pulled the ATRs up for you to look at is if you are going to day trade and you want to work out what markets you want to trade, my best advice is keep it to 3. You know, why 3? Because at least one of them will give you 1 trade a day, and you won't blow your brain up trying to work out and analyze all of the other markets. Because by the time you've analyzed it and you've worked your way through, you've probably missed the trade you were looking for in the first place. Because it can take 10 minutes to analyze a chart. So if you do 10 minutes on one, 10 minutes on the next, 10 minutes on the next, 10 minutes on the next, take you all day to get to the end. And then by the time you get there, that's probably the one that was going to do you well. But if you look at your ATR, which is this here, it's called the average true range, just on a basic setting, on a daily, and then just have a look to see what it is. Sort of, there you are, 75. well, that's the weekend chart, so I'll show you what it is for the normal chart. Put this on just a second. There we go. So the standard chart is about 89.90. Now anything over 60, you're in with a shout of 10 pips. Why is that? Because I never look for the top, I don't look for the bottom, I look for the bit in the middle. So basically whatever the ATR is divided by 3, if it's greater than 20, I've got a chance of getting some money. So that's how I would filter my plans down. I just simply, doesn't matter what the product is, really doesn't. You know, if you want to trade pork bellies and you think the ATR is good enough for you, rock on. Personally, it's too slow. Oil, gold, silver, emissions, all fast moving, if you like, sort of something away from the currencies and the indices. They're very good. If you're looking at the currencies, look at the majors. I've seen many things about people saying stay away from cable, stay away from euro dollar, because that's where the big boys play. The thing is, you need the big boys. The big boys are who move the market, and you want to get on the back of those moves. The trick is finding a way of getting on the move. That's where your analysis comes in. Okay, so that's kind of what I would do. So bit of a wishy-washy answer, I guess, but best advice, day trading, stick to 3 and only have 3. Ideally, you could even thin that down into 1. If you're following some of the videos I do, I'm currently doing a less is more discipline challenge each morning, and it's where I look at the markets and I'll pick one market for the day and I get a golden shot where I can trade it once a day, and that is actually proving good results. Why? Because I'm not chasing the market. I've got one market, one shot. It makes me look for the best trade, and the market is picked based on an ATR that is going to move during that day. And the discipline side is sticking to the rules. So happy days. And talking of discipline, I can see her sleeping behind me. You got any discipline in you today?
Yes.
You have? Oh, I buggered up that joke. I was going to ask her if she wanted some.
Splendid girl, and so helpful. Do you know she's been showing me how to stick the pole up?
Say. Never mind. I'm going to enjoy the coffee. I hope that kind of answers a question of sorts. Just to recap, if you're swing trading, trade as many as you like, because it's just a flick through, but look for one setup. In other words, it's the other way around, you know, multiple markets, single setup. If you're day trading, minimum markets but multiple setups, because you can think, right, I'm going to scalp that for an hour, I'm going to position trade that one for a couple of hours, and you can see different setups throughout the day, and you'll find that you make more money. It's all about up here. If you're stuck, by all means contact me. I've got loads of sort of links and what have you in the description. The brokers I use, there's free software links there as well. And ultimately, just enjoy it. Take your time. Trading's not a sprint, it's a marathon. And if you just work at it slowly and don't expect to be a millionaire in a month, you'll probably find that you have a decent amount in the bank and you've enjoyed the process. Because trust me, trading can drive you mental if you don't control what's up here. And the way to control what's up here, less is more. Calm everything down and you'll end up with more money. So there you go, guys. So as always, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.